Hey, it's Mac with PriceActionTradingSystem.com, and this is Monday. It's August 5th. This will be our chart lesson for today. It's right at lunchtime. I'm doing this a little bit early today, but it is a slow, methodical day, and I mean, there's just not much happening today. And I'm just tired of sitting here and watching it do nothing. It looks like we're really stuck in about a 5-point range, and it's been slow coming down. Was a little bit slow. We got one nice little move here. It was still slow, and then we had a little trap right here, and then another chance to enter short right here, and that's been it. And I just scalped out on most of my trades today. I did ride this one to the top. These two I just scalped out in full on both of them. And the odds are it's going to come back up here and take the runners on this one, even if it is going to go lower. So we're just not getting much movement. And a lot of times on days like that, I'll just scalp out and be done with it. And because it does get frustrating, and especially when it's in stuff like this. And I almost let them shake me out of this trade, but I hung on, and it worked out. And we had a nice reversal. This is actually supposed to be blue. Why I made it red, I do not know. So let's change that back so we don't confuse anybody, and go from there. But let me just show you, it's only a handful of trades. I do want to, before I go to the trades, I want to talk about something. I've gotten I've gotten a couple of emails about this, but what you got to do is you got to understand that even though this is a range day, there are trends within this range. There's a trend down, there's a trend up, and there's a trend working back down. So even though it's a range day, there's trends. And on a bigger range day, there might be a range day where the range is 10 or 12 or 15 points. And you get a lot of movement in both directions, but generally there's a trend in both ways. So you can still use your trend rules until you get to here. And once it proves to be a range, then you need to switch to range rules. Then you're back to your trend rules up through here. But when you get up here, the bigger range, especially once it hits here, then the range rules come into play. And so you got to switch gears. It's not like it's just all range or all trend. You could have both during the day. And as much as this is a range day, this thing could break out of here and go higher, and we might start a big strong trend, and then you're just only trading the trend. So don't get confused about that. You're not married to any one position. You may flip back and forth as the day goes on. And the other thing is that when you get a range day like this, a lot of times you'll get a trend line break. That's an obvious range. You can see it's holding prices real tightly, and then it breaks, and then it makes a new low, and then you're trending the other way. It breaks, makes a new high, and now you're trending the other way. But sometimes this support might be too strong here, and you may get a trend line break, and you may only retest that support, and then it goes higher. And and somebody will send me an email and say, well, it didn't make a new low. Why? How did I know to be going the other way? Well, you just got to go with what's there. And sometimes the range may overpower the trend, especially on a little short trend like that. That's really just a few legs down, and it's real choppy. So it's possible it doesn't get through here, and it makes a double bottom, or maybe it just breaks a tick lower, or maybe it just makes a double bottom and then a little bit higher low, and then it's going the other way. And you just got to go with that next trend until you get something going on it. So don't let that confuse you. Don't get hung up. Nothing is 100% in the markets, nothing. And even though we have these rules that are written around the biases that tells us what to expect to happen, it doesn't happen 100%. It happens 85, maybe 80 to 90% of the time, enough that we can capitalize off of it. But sometimes it doesn't happen because nothing is 100% when it comes to trading. There are no 100% rules. I don't care what anybody says. There's none that are 100%. But if you know what's going to happen 70, 80, 90% of the time, and you do the same thing every time, it's going to work in your favor, and that's what we try to do. So just keep that in mind, and just remember that just because you got a trend working down here and you get a break and all of a sudden it starts trending the other way, doesn't mean that you don't switch gears. You got to switch gears and go with what's there. And you can see that's holding prices pretty tightly, and you get a little break here, you get a move to a new high that tests the high of the range, and then now you're working down. And And this seems to be holding prices pretty good right here now. And you can see that. Doesn't mean that we can't bounce down that line all the way down, or it doesn't mean we can't even break through it. Maybe it's really down here, and that's going to be the halfway mark. As of now, I'd be playing that line right there, and that's why we don't buy. We only want to sell. This is the only line we know for a fact that we want to deal with. The same thing here. We only want to buy. And but let me talk about the trades, and I'm going to wrap it up, and I'm going to be done for the day. I just couldn't take much more than this today, and it may, as soon as I walk away, every time I do that, it'll probably go crazy, and the market will go nuts and start trending in some direction really strongly and really fast. But I won't let that bother me, because I know there'll always be another day. And that's one thing I try to tell people too, is that, once you realize you missed this trade right here, don't try to enter late. I mean, because there'll be another trade that comes along, because if you start trying to enter up here, you run out of room. Or if you start trying to enter short down here, you run out of room and you get trapped on the wrong side. So don't chase a trade. Make sure that you enter where you're supposed to, and if you don't, even if it's going without you, and as bad as you want to jump in, don't do it, because and I'll tell you what'll happen when you don't jump in. It'll just keep going and going and going. But the minute you jump in, it's just like fate. It's going to reverse almost immediately, and you're going to be at the very low. You're going to be short at the very low or long at the very high. It's just, don't ask me why it works that way, but that's the law of trading. Enter where you're supposed to, and don't chase trades, because if you do, it's just going to cost you money. But mostly today I wanted to talk about the trend lines in the short term, and don't get married to either side, especially if it's rangy looking like this, because you're just going to get little trends that go from one side to the next, most likely, until it either doesn't find support, or it gets, it's either going to break through this support and keep going, or it's going to eventually get through the resistance. You can see this is kind of where the range we ended in on Friday afternoon. You can see that this was the support Friday afternoon, and this was the high, and that's exactly what we got. We got a little failed break lower and went higher, and then we couldn't even break through at the top, and we're headed back to the lower side again. So let's talk about the trades, and we'll wrap it up. This one was real iffy to me, but it fits the rules. It's a fail. We got a double top, first entry long, pull back, second entry long, and so once prices broke below here, and we actually broke higher one more time, so it just added a little bit more, a few more trap longs probably. So when we broke through here, what I did was drop the limit order in, so I got short one tick into this thing, and got enough to get out. It took forever, and but it was a failed second entry short. All you needed was the break below this point, and once you start to get all those matching lows, it was a little bit more questionable. So that's why I used a limit order, and instead of a stop. I believe even if you used a stop, it should have worked. Let me just double check. If you entered on a stop 1775, yeah, you can see it worked easy. It was another couple of 3-point move down after that, and then you got your break here, your move to a new low, and then your reversal. This is really your signal bar, the break here, but I liked waiting, and what I did was once it broke higher, I went ahead and dropped a limit order down here, and it came back and filled it pretty quick. You could have waited and gone long on the stop here, because that's really kind of a second entry long type. If you went to a smaller chart, you'd see the move up and a pull back and then the break higher. But I was tempted to, I probably should have even made this one green, and I will, because it's a little more aggressive. But it fits the criteria. It's a trading range. It's a failed break lower. There we had the little trend line to break the new low. I like this for a pullback to at least the EMA. But we went right on through, and then you got a first entry short, a second entry short that fails, so now you got a trap to the low side. So again, because of the doji there, I liked using the limit order a tick or so back in. You got multiple chances to get filled, and then when it went higher again here, it was just almost a repeat, just the opposite of what happened coming down, and but you had more room to get out before the highs. And so I liked adding on, so I doubled up here, and exited this up at the top. And so this little setup here, these 3 trades made me some pretty good money because you had runners going on all of these. You might have exited this one, but if you held on to them, they were good. And so with 3 sets all the way to the top, it made up for the poor day, and that's what you got to do sometimes. And you know, again, I always scalp out even when I add on, but I always try to hold a runner or 2. So then coming down, there's a second entry long right here, but look at this. We just had the trend line break, a move to the new high. We found resistance at the same exact spot. That's strong resistance. And then you got a first entry, a pullback, and then by the time you get the second entry, you got 1, 2, 3, 4, 5 overlapping bars. They're dojis. They're not real strong bounces. It does go a little bit higher, and you find resistance at that same place. So, and look at that big bearish reversal bar. It's a big bar, so I liked using a limit order there. It would have got filled. You wouldn't have got filled probably a tick back in. Could have, but I doubt it since it didn't tick through. You can't count on that one. But with a bar that big that closes on this low, you could have even used a stop there if you wanted to. Especially the fact that you got a double top at the high after the trend line break, similar to down here. But this is a nice second entry short, really. First entry, pullback, second entry. It's a failed second entry long, trap. All the things you want to see, and it was off to the races down. You get a pullback and a second entry short off of this move. That's 1 leg, 2 legs, and boom, off it goes again. And again, I just scalped out of both of those. So this was like a new trade. It wasn't an add-on. I just scalped out of this one down here in the overlap, and then scalped out of this one down here. I just scalped out at 4 ticks is what I did actually. So as soon as my order hit 4 ticks, I was out of that trade. Did the same thing here. I didn't try to hold any runners or anything. So, and then that was it for me. I'm done for the day, and this is probably going to be pretty much it for the video. There were some questions. Let me just see if there's anything else I might could go over real quick. People always ask about the tick charts and why mine look different. Tick charts are not static the way time-based charts are. Every one will look different. I could refresh my chart right now and it would change the way the bars look. So you're never going to get your bars, every bar in your chart to look exactly like mine. And like I said, I could refresh this chart and it will change slightly. And that's just the nature of tick charts. So don't let that worry you. As long as you're getting the same patterns and the same number of bars, then you're good to go. But, you know, it's amazing. Sometimes they will almost look exactly the same when somebody will send me theirs. But for the most part, it's impossible to make your chart look exactly like mine or for me to make mine look exactly like yours. And it doesn't have to. There'll be some setups on my chart that will look better than yours, but I guarantee you there'll be some setups on your charts that will look better than mine. And that's why I always tell people, if it looks close, you know, if it looks like a pattern that we like and it happens at the right place, it's probably going to act like a pattern we like. So don't be, if you're looking for perfection, it's really hard to find it. We want the pattern to look a certain way, but if you're expecting perfect patterns every time, you're going to miss a lot of trades. And that's okay, because you may not need but 1 or 2 to meet your goal of what you're doing for the day. So don't feel like you got to take a lot of trades, but wait on the best ones. Wait on the ones that look good on your chart. If just because there was one that looks great on my chart and it doesn't yours, don't worry about it. You'll get the next one because it may look better on your chart than mine. So your tick charts are not going to look exactly like mine. If they do, that's great, but for the most part, they're probably not. And another thing that could have led you to understand that this was coming back here was this was where the close was from Friday. So even though you see price action trading up in there now, the 8:30 open didn't happen until right down here. And so there's a gap there on the daily chart, and prices were heading up there to fill that. And that's what some of this was, to go fill that gap. And you see we filled it by just a few ticks, and now we're trending downward. And you can see that happen there, unless the market opens up and starts trending very, very strongly. On most days, it's going to reverse and try to fill that gap, and it's going to try it regardless. It may not have the steam to do it, but it's going to try it. So that's another clue that once we broke lower, that was kind of why I was looking for prices to come back up and at least, test this high, because it had to do that to fill the overnight gap. And no, you can't see it on this chart, so don't ask me, I'll get an email or two and say, I don't see a gap. Well, you can't see it, but just know that prices closed at basically, let me move this line. That's where prices closed Friday. And right here is where prices opened at 8:30. Which one of these bars? Let me find the exact bar so I can show you exactly what it would look like on a daily chart. Yeah, it's further over here than I thought. All right. That is where the market opened today at 8:30, right there. And so you see there's a gap between there and where the close was Friday. You won't see it on my chart because I use a 24-hour chart, but that gap is there. It's there on a daily chart, and people look for it. It's important to people. They don't like gaps. They like to fill them. And doesn't mean nothing, like I said, nothing's written in stone. They won't always get filled, but most days they will fill that gap. And so, it doesn't mean they won't run it down 10 points before they go fill it. They'll run it as low as they can. But, there was strong support here, and they probably just wanted to trap the shorts, and that helps them run it back up here to fill the gap. I mean, there's all kind of tricks that the markets play. And when I say they, it's just the combined minds of all the traders. So I don't know who they are. It's just people that are trading. It's the combined minds and actions of all the traders, put together, and that's who they are. So I get that question. Who is they? Well, it's just other traders. It's the combination of all the traders thinking and acting and buying and selling. And so hopefully that makes sense. But there is, be aware of these gaps, and there's an indicator. You can put it on there. I don't like to have it on there because but it's there. It's called current day open high low. Where are you? There it is. Put it on there. I like to change to plot the current value only so it looks right, and then apply it. And you can see there it is. It actually shows the open, so the gap was really up here. But generally the open and the close are going to be at the same place, so that may not get you exactly where you need to be, but there's still a gap. If that's where we opened at 8:30 right here, then there's still that gap right there. And you see it found resistance right there because a lot of people were just try to sell that, trying to scalp off of it, and then you get to the next one and same thing. And so there's ways to find it if you don't know how to find it, but it shouldn't be hard to look at your chart and see where did prices close the day before. There's my line showing the market open, so that's where we closed, and then we opened down here, so I just put a line right there, and that's where the top of my range or something I'm looking for it to fill. Today it just happened to be the top of the range too, which I moved a little higher once we got there. And you can see that we bounced off that area one. Look how many times. That's how you know that's strong resistance. Somebody else asked me today on a chart, they asked me, how do you know, what size chart do you use to find strong resistance? Well, it's just whatever your trading chart is, you'll know, because look, prices turned down 1, 2, 3, and I'll count each touch as not each bar, but each touch. 4, 5, 6 times prices have gotten to 1704 3/4 and couldn't get through there. So that tells you something. That tells you that's strong resistance. Look at the support down here. We've touched this area once, twice, 3 times, 4 times, 5 times, and we actually broke through a 6th time and reversed. And I like that better than just bouncing off of it, because this traps people. It traps people out of the market. It traps all longs out. They have their stops hiding down here, and that's what runs it down. And then there's all these people that like to get short on a breakout of a trading range because they think it's going to go, But most of the time, even if it's going to go lower, it's going to come back and retest the area first and then turn down. And that's why we wait on a breakout pullback to get more clarification or confirmation before entering a trade. So hope this all made sense to you today. Not a lot of trades so far, and you can see it's just, since I got out, this whole video we've made 4 bars have gone nowhere. So it's just not a very, it's just not much happening today. Doesn't mean that it can't take off at any minute, but I'm not going to be here to watch it because I've had enough. So I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll be back to do it again tomorrow.